Welcome back. You're with us on Trading Hour. As promised, let's straight away dive in and look at the performance that Reliance Industries has put up at the end of the third quarter, showing growth pretty much across all of its key operating businesses. Sonia is joining in with a consolidated overview on the numbers. Sonia.
Well, thanks a lot for that. For Reliance across segments, they had a good performance, especially in the retail segment, which was a stellar performance for them, and Reliance Jio, which reported stable earnings this time. But let's take a look at what brokerages are saying. Morgan Stanley has an overweight with a target price of 28.21 on Reliance. They say that the company reported the slowest investment capex in the last 2 years. Gas production is what drove the numbers this time around, and the net debt was flat. CLSA has a buy with a target price of 3,060. They speak about how capex has fallen to an 8-quarter low for Reliance. Macquarie has a neutral on the stock. They say the key positives this time was the very strong retail performance that Reliance delivered and a solid Jio subscriber addition as well. Nomura has a buy with a target price of 31.65. They talk about a sustained healthy performance for Reliance, and both the consumer businesses, Jio and retail, are picking up pace, and there's a sharp uptick in the upstream business as well. Finally, Jefferies has a buy with a target price of 31.40. They say Jio saw healthy subscriber addition. The oil to chemicals profitability declined on maintenance and lower spreads in refining and the petchem space. So largely positive outlook from most brokerages. Back to you.
Well, let me zoom in a bit on the telecom business. That's Reliance Jio, and it was a very steady quarter, bang in line with street expectations. The company's delivered a 2.5% quarter-on-quarter revenue growth, 10% on a year-on-year revenue growth, in line with expectations. The company's top-line growth has been driven by subscriber additions. So the subscriber additions for the company have come in at 11.2 million subscribers. This is on a quarter-on-quarter basis, and this is ahead of consensus expectations slightly, and it's the best that we've seen in the last 10 quarters. The subscriber base for the company now stands at nearly 471 million subscribers. ARPUs, though, for the company have come absolutely flat, unchanged on a sequential basis. So in-line numbers from Reliance Jio, and once again, it's the strong subscriber addition which is driving growth for the company. But moving on to Reliance Retail, Mangalam joins in with the fine print. Mangalam.
Reliance Retail is a juggernaut that keeps rolling on. $10 billion is the highlight in terms of quarterly revenue that the company crossed this time around, and that's the milestone that really stood out for me. Both revenue as well as EBITDA have been at a record high this quarter, but that's something that Reliance Retail is used to already. But 23% jump in year-on-year revenue, 30% jump in year-on-year EBITDA is something on that pace which is breathtaking indeed. 7.6% margins, that's a near 50 basis points improvement year-on-year. Importantly, total footfalls crossed about 28.2 crore. The company added 252 stores this quarter. For perspective, other retail players, the second one, for instance, DMart, has around 340 stores in total. Reliance's footprint now stands at around 19,000 stores, and importantly, digital and new commerce businesses contribute around 19% to their overall revenue. We also saw strong growth across all parameters, all sectors. So grocery, for instance, grew 41%. We saw consumer brands delivering 3 times growth over last year. Of course, this comes on a low base. Fashion and lifestyle itself grew 28%, and consumer electronic grew 19%. The last known valuation of the retail business was $100 billion, but now that it's done $10 billion in quarterly revenue itself, maybe there is a case for a valuation upset or upside on Reliance Retail.
Okay, all right, Mangalam, thank you very much. So Reliance Retail doing well for the company. Let's finally get to then the O2C, the oil to chemicals segment. We have Sonal joining in to tell us exactly how that played out. I guess the upstream segment, all the gas that Reliance is getting from the KG Basin, that was a big headline, Sonal?
It is record high EBITDA there, but let me start with the oil to chemicals business. It was slightly subdued, but understandable since the company had taken a maintenance shutdown in the quarter gone by. First, running you through the numbers, the revenues came in at 1.41 lakh crore rupees, which is an increase on a YOY basis. Their EBITDA came in at 14,064 crore rupees, largely in line with what the street was estimating. It is a decline on a quarter-on-quarter basis, but it is a good performance on a YOY basis, leading to EBITDA margins of 10%, which is an increase of 40 basis points on a YOY basis, down 100 basis points on a sequential basis. The company says that planned maintenance and inspection shutdown impacted yields and profitability. Had the planned shutdown not taken place, there would have been an increase in EBITDA both on a YOY and on a quarter-on-quarter basis. And planned shutdown is something that refineries do. It is a process which happens every 7 to 8 years for increasing the efficiency. So this is the reason for the weak performance on a sequential basis. Now going on to the oil and gas business, record high EBITDA, and it has been surprising every quarter. Their revenues came in at 6,719 crore rupees, EBITDA at 5,804 crore rupees, which is a big increase on a YOY and on a quarter-on-quarter basis, and higher than what Street was estimating as well. EBITDA margins came in at 86%. Their block KG-D6 is currently producing gas of around 30 MMSCMD, and to give you some perspective, 50% of the gas consumed in India is actually domestically produced, and we consume around 180 MMSCMD of gas every year. So this will be a big chunk of addition in terms of domestic gas production coming in only from Reliance Industries. Now I have a brokerage note which is from ICICI Securities. They say performance was strong across segments barring O2C. However, the last few weeks are seeing a jump in Singapore GRM, something that we've been pointing out, and this is something which would mean good refining performance from the company in Q4. Now going forward, the updates on green energy segment, media merger with Disney Hotstar, and momentum in retail and the upstream segment will be the key triggers to watch out for going forward.
Thank you very much for that. Let's move on then. We'll slip into a break. On that note, we'll come back, discuss market technicals. Mitesh Thakkar joins in. Stay tuned.